What's going on, guys? It's Andy here. Welcome back to the Andy Kandola Show. I want to go ahead and share with you guys my top 10 dividend stocks I'm looking to go ahead and invest in really heavily during the rest of this year. Basically, these are going to be my top 10 dividend stocks that I'm buying throughout 2021. Now, guys, before we get into that, I'd like to be fully transparent, share with you guys where we are sitting in this portfolio, which I call my bucket list portfolio. Now, currently, the portfolio is sitting at $128,811. We are down a little bit of money in the last day. We're down about $454 in the last week. We're up $621 or 0.49%. In the last month, we are up $6,165 or about 5%. In the last quarter, we're down $682 or 0.58%. And then all time, or in the last year, we're up $5,901 or 7.54%. And then all time, because it's been over a year at this point, we are up $8,527 or 12.81%. So guys, if we look here, the earned dividends, this is the part that I get really excited about because my money's literally just working for me and making me more money. So far, earned dividends, we have $1,548 that we've earned in just dividends in this portfolio. And that's why I'm going to share with you guys my top 10 dividend stocks. I'm highly investing in these stocks because I want to go ahead and grow my passive income and start earning more and more dividends in this portfolio. These are going to be my biggest conviction stocks. And personally, guys, if you've been following me on this channel, I love investing in dividend stocks. I do invest in growth stocks as well that have potential big returns. But with dividend stocks, these are going to be my top 10 bullish dividend stocks. And I love investing in these because they just build me additional passive income. I'm making money if the stock price goes up, but at the same time, I'm making money because these companies are paying out dividends either monthly or quarterly. So let's go ahead and jump right into it, and I'll show you guys the trades that I currently have a position in right now. 4 out of the 10 stocks that I'm talking about, I am going to be buying into throughout the remainder of this week. I do like to go ahead and dollar cost average in this portfolio if you are new to this channel. So I do keep a decent amount of cash balance in here, or I should say I try to keep whatever I can as far as the cash balance goes. But jumping into the first stock here, this is going to be one of my favorite banks, and that's going to be JP Chase. Now, JP Chase, the current value is sitting at $4,328 in the portfolio. We're up $1,181, and I'm up about 80% from my original investment. The earned dividend so far we have in this is about $52. Now, JP Chase is a dividend payer. With JP Chase, the current dividend yield is 2.30%, so not a bad dividend for the largest bank in the US. Plus, their dividend safety score is a 60, so that means that they are borderline safe. Now, the other thing that I want to show you guys is as far as their dividend growth. With JP Chase, since we had the housing crisis and the whole bank crisis in 2008, 2009, JP Chase has consistently been growing their dividends for the last 10 years, and they've consistently been paying out their dividends for the last 11 years. So I like the consistency in this bank. This is the largest bank in the US. Plus, guys, recently the Fed just announced that we are not going to be increasing the interest rate, meaning that the first increase is going to happen in 2023, and the Fed basically decided that they're looking to go ahead and raise the interest rate twice during the year of 2023. But that means short term, 2021, 2022, the interest rate is not going any higher, meaning more people are just going to be borrowing money at a lower interest rate. So in any case, this is a good sign for bank stocks because more and more people are borrowing from the bank, and at the same time, the bank is getting their share of the interest from those loans. But guys, this is going to be my first stock. I am investing in this one pretty heavily because I believe JP Morgan is the strongest bank. They're actually in the technology space as well. They're the most innovative bank out there. But now jumping into the second stock, the second dividend stock that I'm investing in pretty heavily is going to be Realty Income Corporation. Now, Realty Income Corporation is considered a REIT. All-time Realty Income, we are up, so that's extremely nice to see. And guys, check out these dividends. But our current value is $3,335 in realty income. Overall, our total gains are $1,086 or about 27%. But the earned dividends, this is the best thing that I like about real estate investment trust because they all pay out pretty nice dividends. But with realty income, I have so far earned $237 in just dividends. Now, I love this company because this is a monthly paying dividend stock. plus the current dividend yield is 4.13%. Realty Income just had their 111th monthly dividend increase, which is extremely good. This is another stock that has a good safety score. It's got a 70 as far as a safety score, and that to me is a good sign. This company has consistently grown their dividends by an average of 3%. But if we look here, guys, this is actually considered a dividend aristocrat because this company has grown their dividends for 26 years. And to be considered a dividend aristocrat, you have to have grown your dividends by 25 years plus, and you have to have consistently paid out your dividends for at least 25 years, which in this case, they've paid out their dividends consistently for 26 years. But now let's go ahead and jump into the third one. The third dividend stock, this is actually going to be the largest company in the world, but this company does pay out a dividend, and they consistently have been, and this is going to be with Apple. Now, Apple, I added in my portfolio when I started this portfolio. Love everything about this company, love their ecosystem. Once you get sucked into their ecosystem, it's extremely hard to get out. Apple's retention rate in their ecosystem, once you go ahead and switch over to Apple, is over 90%. And that's because their user interface is very easy to go ahead and use. Plus, everything that they make looks really slick. I am a believer in their ecosystem. Apple's current value, guys, in my portfolio is $17,907. As far as my overall gains go, I have had a total gain of $3,162, or I'm up about 44% from my original investment. Now, Apple does not pay out a huge dividend, but at the same time, this company really focuses on growth, and I like the idea that they still pay out some sort of dividend, because this is, I believe, one of the best companies long term for a younger person that's looking to go ahead and have some cash flow, plus have the potential for growth. With their dividends, I've earned a total of $76.51 in earned dividends. Now, Apple is considered a 99 when you go ahead and look at their dividend safety score, meaning it doesn't get any safer than that. They're considered very, very safe. Now, as far as the dividend yield goes, it's sitting at 0.68%, but they've actually been growing their dividends at a pretty high pace. They've been growing their dividends by 7.3% on an annual basis. But here's the thing to look at here, guys. With Apple, since they started paying out their dividend in 2011, they've consistently been paying out their dividends. So this is a company that I believe will one day become a dividend aristocrat and eventually become a dividend king, because I don't see this company stopping their dividends anytime soon. They've consistently been paying out their dividends for the last 8 years, and they've grown their dividends for the last 8 years. So that's basically what we're seeing here. Now, the other thing with Apple is this is the largest company in the world. So they are considered a mega cap, but I believe this company will go ahead and cross over $3 trillion in total market cap before 2023. I do believe with Apple, with everything that they're working on, they have some secret projects going on as well. They're trying to go ahead and take on Tesla as far as getting into the electric vehicle sector, but we'll see. I know Apple's got a lot of things up their sleeve, and I'm a huge believer in this one. Now, guys, let's go ahead and jump into the fourth one. The fourth company here is going to be Cisco Corporation. Now, Cisco Corporation is the largest distributor to restaurants and in the hospitality industry. Basically, if you have a restaurant or if you have any type of goods that you need, Cisco is extremely competitive. I actually use this company myself for some of our businesses that we own. And with Cisco, they're extremely competitive. If you go to them and you got a better price from a competitor, they will more than likely match that, or they'll actually undercut that. So I really do like Cisco. I walked away from Cisco a couple times in the past, but every single time I've always come back to them, and currently this is a supplier that we go ahead and use. So with this whole recovery from COVID and more people traveling, I believe Cisco's going to do extremely well because more restaurants are opening up and there's just more businesses in general opening up, which this is a recovery stock, so it's really going to help this company. But the current value, guys, in my portfolio for Cisco is $3,083, a position that I'm going to go ahead and look at definitely growing. I'm up $583 in this company, or about 45%. And then the earned dividends, so far I've earned $41 in dividends. And if we go ahead and look at the dividend safety score for this company and their growth, Cisco does have a 70 as far as their safety score goes. I personally think that this company could have a 99 as a dividend safety score because we're out of this pandemic and I don't see this company dropping their dividends. But they're currently paying out a dividend of 2.43%. And if we look here, guys, this is the nice thing. Cisco is actually considered a dividend king, meaning that they've been growing their dividends for 51 years and they have not cut their dividends. So they've consistently been paying out their dividends for 51 years. That to me tells me this company is extremely committed, and I don't see them stopping anytime soon. I do believe this is a great company for growth, but more importantly, this is a great company for a dividend stock portfolio. So this is going to be the fourth stock on the list. But now guys, let's go ahead and jump into another sector here. The fifth one on this list is going to be my favorite utility company, and this is going to be with NextEra Energy. Now NextEra Energy is by far my favorite utility company because they're focused on solar energy, they're focused on wind energy and renewable energies. They're the largest company that actually focuses on renewable energies. And with Biden having an infrastructure plan that he's looking to go ahead and roll out, I believe there's going to be a lot of different tax credits that this company can go ahead and take advantage of, and it's going to potentially help this company grow even bigger. Now, my current value in NextEra Energy is sitting at $2,897. And I am up overall $214 in this company, or about 11%. And then my earned dividends are sitting at about $54. Now, with NextEra Energy, another very safe company in my opinion when it comes down to a dividend. They have a 99 dividend safety score. They do pay out a dividend yield of 2.10%. Now, if you do go ahead and compare them to other utility companies, the dividend yield is a little bit less, but you're getting a lot of growth potential with this company. I like this company for a long-term portfolio, somebody that's looking to go ahead and keep this company up until retirement and let that dividend yield just compound over time. Now, additionally, if we look at the dividend growth of this company, another one that's considered a dividend aristocrat. This company has consistently been growing their dividends the last 25 years, plus they've been consistently paying their dividends for the last 25 years, and their growth rate is really nice. If we look at the last 20 years, they've been growing their dividends by an average of 9%, which is considered fast. Last 5 years by 13%, which is considered very fast, and then the last year they grew their dividend by 10%, which is also considered fast. So this is by far my favorite company when it comes down to the utility sector. Now, jumping into the sixth company here. The sixth one is going to be going back into real estate investment trust, and this is my second company that I basically hold in the real estate sector, and another one that I personally really love, and this is going to be with Store Capital. Now, my current value in Store Capital is sitting at $4,036. I'm up $800 in this company, or about 28%. And so far, guys, I've earned $93.18 in overall dividends. Now, Store Capital and Realty Income are very similar as far as what they do. They're basically big landlords that own a lot of real estate, and they go ahead and rent out their real estate to different companies. With Realty Income, they focus on more large companies like Sam's Club and Walmarts and Walgreens and 7-Elevens, where with Store Capital, they focus on large tenants, but they also focus on mid-size and smaller tenants. The benefit that they have is with smaller or mid-sized tenants, they're actually able to go ahead and get higher rents, and because they're focused on triple net leases, once they go ahead and have the tenants in place, their cost is basically nothing because the tenants are paying for all the maintenance and basically paying for everything, where Store Capital is just collecting that money. Now, the other reason why I really like this company is Warren Buffett is a huge investor in this company. He owns a big share of this company as well, and I'm a believer in Warren Buffett's strategy because he does focus on dividend-based stocks as well. Now, if we go ahead and look at the dividend safety score and the dividend yield, Store Capital is paying a dividend yield of 4.11%, and the dividend safety score is considered a 70, so this company is considered safe. Now, if we look at their dividend streak, Store Capital did go ahead and cut their dividends, but they brought them back. Basically, this company has been growing their dividends for the last 6 years, and they've been consistently paying out their dividends for the last 6 years. So I do believe with real estate and with getting out of this pandemic, that I don't see this company stopping their dividend anytime soon. I believe real estate's just going to keep on growing, and that's one thing from investing. If you invest in anything, invest in real estate, because at the end of the day, there's only going to be so much land that can be developed. So guys, this is going to be the sixth stock on this list. Now let's go ahead and jump into the next stock here. The seventh stock on this list is going to be a company I believe that has a very strong ecosystem as well. This is going to be with Costco. Now Costco, my current value is sitting at $3,178. I'm up $298 in this company, about 18%. My total earned dividends in this company are $69.68. Costco is a company that has a very strong ecosystem. They're basically the number one company when it comes down to wholesale products, or basically buying products in bulk. They're very price competitive plus their employees love them, and every single customer loves them as well. I don't know of anybody that does not like Costco. Now with Costco, this is a very safe company as well. Costco's dividend safety score is considered a 99, plus their dividend yield is 0.83%. With this company, another great company when you go ahead and look at their dividend growth. This company started paying out their dividends 16 years ago, and they've been consistently paying their dividend. I believe this is going to be another one of those dividend aristocrat companies down the road here. I can already see it in my head where this company is going to consistently go ahead and keep paying out their dividends. Now I will tell you guys, owning this company for over a year now, I actually got a one-time dividend payment as a bonus from them, and it was about $56. And that was at the end of last year. So this company will also go ahead and pay out a bonus if they're beating their revenues, which I never got that type of bonus from any other company, or I should say I never got a bonus from any other company. This is the only one that actually got a dividend bonus on top of the consistent dividend that this company pays out every single quarter. But basically guys, with this company, the dividend growth rate is they've been paying out their dividends for the last 16 years, and they've been growing their dividends for the last 16 years. Plus, if we look at their growth rate, it's considered very fast. Basically, between 12 to 13%, they've been growing for the last 10 years. So huge believer in this company and their ecosystem. Now, let's go ahead and jump into the eighth company. The eighth company is going to be another one that's in the technology sector that's focused on growth, but they have a lot of different ways that they go ahead and make money. This is going to be with Microsoft. Now, Microsoft is a position that I'm looking to go ahead and add on to because they have so many different ways that they go ahead and make money. Plus, this company, when I go ahead and imagine them in 10 years from now, in 20 years from now, I believe this company is only going to go ahead and grow each one of their sectors that they're diversified in. With the current value of Microsoft in my portfolio, I have a current value of $3,900. I'm up about $975 in this company, or about 46%. Plus, earned dividend wise, I have $30.91 that I've earned in this company. Now, because Microsoft is extremely diversified and they have many different ways that they go ahead and make money, this company is focused primarily on growth, but they do pay out a dividend as well. So this is another stock that I believe is a great stock for a long-term investor that's looking to retire with a company that will consistently go ahead and increase their dividend. Plus, with the power of compound interest, I believe it's a great company to invest in. But the dividend yield in this company is 0.87%, and the dividend safety score is a 99. So of course, they're considered very, very safe. Now, another company that has been consistently growing their dividends for the last 10 years, and they've been consistently paying out their dividends for the last 14 years. So since this company started paying a dividend, they haven't stopped. But as far as their growth goes, they've been growing their dividends for the last 10 years, but they are growing their dividends at a pretty decent pace. But now let's go ahead and jump into the ninth one. The ninth company, I'm going to stay within the technology sector, and this is going to be another one that I really love, and this is going to be with NVDA. Now, NVDA is one of the largest company when it comes down to semiconductors. They are the largest company that's the manufacturer of semiconductors, and as we know, there's a huge shortage of chips and semiconductors. So basically with this company, I see huge growth potential because they can actually charge a higher premium and have more margins because they can charge a bit of a higher price because there's a shortage in semiconductors. My current value in NVIDIA is sitting at $6,121. I'm up about $2,000 or $1,931 to be exact, and up about 80%. Now my earned dividends are quite low in this company because they're really focused on growth and not as much on dividends. But again, another stock that ultimately will grow over time as long as you go ahead and dollar cost average into a company like this. But with NVIDIA, of course, they're considered very safe. The dividend safety score is an 89, but the only downfall is the dividend yield is extremely low. It's 0.09%. But again, as a long-term investor, I do like this company. Now, NVIDIA recently did go ahead and pay out a dividend, but they didn't grow their dividend because they're focused on growth. Because there's a shortage in chips, this company is really focused on developing more factories to go ahead and make more chips. So this company's dividend growth streak is a 0, but they've been consistently paying out their dividends for the last 8 years. So I don't see this company stopping their dividends, but at the same time, they're able to go ahead and take advantage of the shortage and able to go ahead and grow as far as their stock price goes. So this company is really focused on the growth, and I believe with a consistent dividend, this is a great company for a long-term investor. But now guys, jumping into the final one here, the 10th stock on this list is going to be Nike. Now Nike is another strong ecosystem. They are the #1 brand in the world. And this company, I believe, is going to do extremely well because when it comes down to apparel and their brand, they're #1, and I don't see anybody taking over. With Nike, my current value is sitting at $3,675. I'm up, or about break even, I should say, at this point. I'm up about $19 or 1.44%. In my earned dividends, I have made $16.82. So I am around break even with this company, but another one that I'm a believer in long term. Now, this company has a 99 as far as their dividend safety scores, and they have a dividend yield of 0.84%. So this company does pay out a dividend, but over time, I think they're going to go ahead and keep growing their dividend. But with this company, guys, another one that's a great company for a dividend investor because this company has been paying out their dividends, and they've been growing their dividends for 18 plus years, and they've been paying out their dividends for the last 36 years. So love this company, love everything about their ecosystem and their apparel. I use this company myself. I love their apparel. But guys, these are basically going to be my top 10 dividend stocks that I'm investing in throughout 2021. Now, if you want to go ahead and keep up with this portfolio, don't forget to subscribe to the channel down below. I'd like to go ahead and share with you guys all the different investments that I'm making every single week. Keep it fully transparent. Goal is to get this portfolio to above $250,000 before the end of this year and ultimately get it to above $1 million. And guys, if you enjoyed this video, don't forget to smash that like button. If you are interested in investing in M1 Finance, gotta throw that plug out there. They have a limited time offer where you do get $30 to go ahead and set up an account with them. But I'll leave it at that. Thank you guys, and I will see you at the next one.